this is the third consecutive red day in which the market is down more than 1%. Now, Amazon reported earnings today and the stock was down 4%, and after hours, the stock was down 11%. So let's take a look at their earnings to see if the stock is a buy at current prices. And let's start looking at the basics. Net sales increased 14% to $213 billion in the fourth quarter. Now, this is insane at the scale that Amazon is at. And basically, they're going to be the first company ever to report $1 trillion in revenue. Now, it is true, and we have to keep in mind that fourth quarter tends to report higher revenue growth because of that last quarter that has a lot of holidays in it. But this is still insane, and they added like $15 billion compared to the $187 billion from last quarter. Now, if we take a look here at the segmented revenue, North America segmented sales increased 10% year over year. International increased 17% year over year. Now, this is logical because the US is much more saturated. Everyone uses Amazon, so they still have a lot of opportunity on the international side. And AWS, which has been and still is a huge growth driver for Amazon, increased 24% year over year to $35 billion, which is insane. Now, if we take a look at net income, it increased $25 billion in the fourth quarter. Again, amazing numbers. And this is huge because Amazon used to show very little profit in the past, but now it is one of the most profitable businesses in the world. And now let's take a look at a broader look at Amazon because earnings are just one quarter, but Amazon is just an outstanding company. I mean, the market cap is $2.38 trillion, and with this drop, it would be, if it drops 10%, like a $2.1 trillion company, which is insane, growing revenue and profit at double digit. And now they are trading at a 4P of 29, and with the almost 10% drop, it would mean a 4P of around 25. So it might look cheap for Amazon. Analysts have them rated as a strong buy with a price target with 28% upside. And their financials have been insane. I mean, Amazon has grown from $135 billion in revenue to currently making $716 billion. And as we have seen, now in the quarter, they are generating around $250 billion, which is insane. Now their profit, as I've talked about before, this used to be a company that showed very little profit. And right now, currently, they are generating $77 billion. So they have improved massively in this aspect regarding net income. However, if we take a look at their free cash flow, it is much less. As you can see here, $7 billion in the past 12 months, and even the years prior, $32 billion compared to the $77 billion of net income. Now, this is because Amazon is a capital-intense business when you think about all the trucks and distribution centers. And also, a reason why the stock was down is because Amazon said they were going to spend $200 billion in AI. Now, this is in order to join the other big tech companies in this AI spending spree that we are seeing. Their margins have also improved massively in the past 10 years, a gross margin that has grown from 35% all the way to 50%. Profit margin has grown from 1% to 10% currently, and as we've already seen, free cash flow margin, it is lower, currently at around 1% because of all that spending. Now, before looking at the valuation with the discounted cash flow model, let's take a look at what analysts are expecting for the future. Now, in terms of revenue, it is insane. They are expecting double-digit revenue growth for the next 5 years. And as we've seen before, the first company ever to report $1 trillion in revenue. Now, as far as profit, even more growth. I would say double-digit growth for the next 7 years or so, which is again insane. And by 2030, they have Amazon reaching $17.69 per share and $1.23 trillion in revenue. There is no doubt that Amazon is one of the best companies in the world. Now the question is, can we pay a good price in order to make a good return on your money? Now, in order to answer this question, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $90 per share, middle $173, and high $292. Now, because the stock in pre-market is now trading at $204 per share, so the stock has gone up a bit, it means that if my low assumptions occur, you would get a negative 3.3% annual return on your money, middle positive 7.2%, and high 16.4%. This is according to my assumptions, in which I assume Amazon grows revenue between 7 and 13% annually over the next 7 years, the average of profit margin and free cash flow margin between 6 and 12%, which for me, this is the hard part about valuing Amazon. And I also assigned the P/E price to free cash flow at the end of the 7 years of 20, 22, and 24. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And I want to end this video similar to where we started. The market is currently overvalued. If we take a look at the Shiller P/E ratio, 39, and in the dot-com bubble at 43 at one point. So the market being overvalued means that stocks are going to start to fall at one moment. Nobody knows when. We had 3 consecutive days where the market is red, and if we take a look at some commodities such as silver or gold, they have taken a huge beat this year, especially in the past couple of weeks. Bitcoin as well have been suffering, down 43% in the past 6 months, although I believe Bitcoin is a horrible investment. It's not even an investment, but anyways, these are signs that the market might start to fall, but we never know. And now this doesn't mean you shouldn't buy any stocks. You have to pick stocks that you believe are undervalued and start to dollar cost average your way into them. I hope you found this video valuable. Let me know what you think about Amazon stock in the comments, and I'll see you in the next one.